right, April, it's that time of year. We are talking year-end tax strategies. Only a few months left right now, so it's time to start planning. We are still firmly in bear market territory. Both stocks and bonds are sharply negative. In fact, the market has lost nearly 1/4 of its value since the beginning of the year. Ouch. So now let's talk about how those negatives can actually be some opportunities. And the first thing that you are suggesting we consider as we look at market benchmarks is tax loss harvesting. What is that?
Yes. So a lot of times people think that all they can do is have a $3,000 capital loss carry forward when they have a loss on an investment that they sell. But in reality, there are a lot of other strategies that we can use as well, where you can pair winners and losers, particularly when we have a period like we do right now, where both stocks and bonds are sharply negative on the year. As you said, about 1/4% down year to date from where it started. So there are opportunities where you can find some of those losers now, sell those, and pair them with some of the longer term gains that you have in order to really have a tax advantage that comes out of the volatility that we're seeing right now.
Okay. Now, I don't know if it's because we're creeping up on Halloween, but the next point you wanted to bring up was phantom income. So these are mutual funds, right? Mutual funds, they can actually cause a tax burden in a year when there are losses. Explain that, please.
Yes. So with actively managed mutual funds, what will often happen is positions will be sold within the mutual fund. And even when you're seeing a loss on your income tax statement, or you're seeing a loss on your investment statement, rather, you will still potentially see some taxation that you'll have when you get your income tax forms next year. So taking a look now at what those possibilities might be, where those exposures might be inside of actively managed funds, and coupling that with some of those other strategies that we were talking about a moment ago with pairing losers with winners can really help you make sure that in addition to all of the volatility and the market losses, that you don't also have surprise taxation in a year where you're expecting to have a loss, because the opposite can certainly be true when things are being shifted around inside of mutual funds in particular.
Okay. And the next point that you say that we should consider as far as strategies go, Roth conversions. Why is that?
Well, right now is an opportunity when everything is down to take a look at doing a conversion while the asset is lower and allowing it to recover in an income tax-free strategy. So you're kind of you have your cake and eat it too a little bit there, where the premise of converting to a Roth, either partially or full conversion to a Roth, is that you're paying the taxes now on the seed when the taxes are lower, rather than years down the road on the harvest when the taxes are potentially higher. We know those taxes are going to be paid. It's just a matter of when and how much. So again, taking control of what we can is something that we often focus very heavily on when there are periods of volatility like this. What are the things that we can control, and how can we make something positive come out of this? So with a Roth conversion strategy, it's important to work with a CPA on this and make sure that you know what those implications will be. But a down market can actually pose a great opportunity for that Roth conversion strategy. And particularly since we expect taxes have a pretty high probability of going up by 2026 when the current tax laws sunset at the end of 2025. So we've got a couple of years here of opportunities to take advantage of those income tax brackets where they are today.
That's right. When you take a look at government debt, they either have to rein in spending or tax us a little bit more. So I'm sure that's a safe bet. April, this was helpful. If somebody has questions about how to reach you, what's the best way to get a hold of you?
You can get a hold of us 24 hours a day on our Contact Us form on our website at theretirementfamily.com, or you can call either of our offices in Snellville or Swanning, and our client service team will be happy to help.
All right, April, thank you.
Thank you.